Hello, today we will present about the NFT and some argument about scam. Next slide. Non-fungible tokens are blockchain-based cryptographic assets having unique identification, code, and metadata that separate them from one another. This is in contrast of fungible tokens such as Bitcoin, which are all similar and hence can be used as a medium of exchange. NFTs change the crypto paradigm by making individual tokens singular and unique, making it difficult to compare one non-fungible token to another. The universe of digital art and antique is today dominated by NFT. Next slide. There are many types of NFT such as art, music, video games, items, sport, and memes. Thanks to massive sales to a new crypto audience, the livelihood of digital artists are changing. Celebrities are also getting involved, recognize a new way to communicate with fans. NFT have the ability to be used in various ways such as digital art. They may rarely be used to indicate ownership of specific assets such as digital or physical property. Although the sound of NFT are interesting and fantastic, there are in fact faults that have been big concern for investors. A lot of people accuse NFT as a scam, where people are finding opportunity to scam others using the platform.
And next slide. In terms of financial literacy, in the age of an ever-changing world, there is always a development of technological advancements. In terms of medium of exchange, it involves form and objects, then gold, fiat money, and now digital currencies, including cryptocurrencies and NFTs. It shifts from tangible assets to intangible assets. There are more and more people that now tend to invest in cryptocurrencies or NFTs instead of simply depositing in bank accounts because they perceive that investing in digital currencies can generate a lot of capital gains. However, remember that high risk, high return. Investing in digital currencies provide investor high risk, including losing initial capitals, hacking, and scams. Next slide. In terms of NFTs, it is not only about the price, but also mentally values because NFTs can be artworks, gaming, sports, music, or even memes. Therefore, there will be conscious investors who invest based on morals. Their decisions in buying NFTs are influenced by the ethical values of the assets, so it could limit their choices of investments that might lead to the lower chance to receive returns. Also, there are company loyalists who invest in their loyal tokens. For example, if there are a loyalist of a football clubs such as Liverpool, they could invest on football player cards that are minted as NFTs. Again, investing in NFTs contains high risk of scam. Investors should study prospectus carefully before investing.
Moving on to the next part, which are how does NFTs have an effect on each stakeholders? There are three main stakeholders that have an effect from the NFTs. The first stakeholders that are affected by the NFTs are the investors. Investors are a group of people, whether a collectors or speculators, who are interested in NFTs, consisting of art, music, video games, collectible items, memes, visual fashion, and etc. The effect that the NFTs have on the investors is an increase in a range of investment. Since NFTs is a new type of investment under the cryptocurrency, it opens a chance for investors to buy and sell a digital asset, since some investors might not be interested in a traditional investment such as stocks, bonds, or funds. The second stakeholders are artists or creators who are the owner of the NFTs. They are a group of people who own the originality of the work because NFTs allows the investors to buy and sell the ownership of the digital asset. It also allows the creator or artist to convert their work into NFTs and gain profit by selling the rights and ownership of their work to the investor who is interested in it. This opens a chance for them to use skills and originality of the work they have in their hand to generate some profit for themselves. Moving on to the last stakeholder group that has an effect from the NFTs, the government. The NFTs have a major effect on the government's regulations because NFTs are a new type of investment in the market. It is a government's duty to ensure that the investor is trading safely and legally under the regulations. According to Thailand regulations, the NFTs are falling under the Digital Asset Business Operation or DA law. It is a specific regulatory regime for digital assets under the emergency decree. To conclude this, the arrival of NFTs have affected three main stakeholders: the investors, artists, and the government. The investors have been affected by an increased type of investment, whereas the artists have been given a chance to use their skills and originality in their work to generate a profit. Lastly, regulations are required in every investment. The government has to ensure that these new type of investment are safe and regulated among the investors.
We'll be looking at why NFT are relevant and how it could be an alternative source of income to us. In nowadays investment, NFT is integrated into many businesses such as football, game, music, and artwork. If we were an investor, we can gain the profit by buying an NFT for speculation purpose. This can be considered as a new type of investment where the investors could generate more profit, hoping that the price will increase in the future. However, if we identify ourselves as creators, some people might view NFT as a generated profit for their living, since NFT can be bought and sold from other investors. Moreover, as NFTs start to be well-known and widespread, leading companies are now implementing NFT into their business. Therefore, we think that NFT are relevant to us because if we are aware of NFT, there is an opportunity that we can generate a profit and be aware of the scam as well. Next slide.
Next is the advantages and disadvantages of NFTs. So let's begin with the advantages. There are numerous reasons why investors might intend to buy assets that have been tokenized into NFT. Investing in NFT has a number of advantages. For the first one is anyone can invest in NFTs. Tokenized assets can be purchased by anyone. Assets ownership that has been tokenized into an NFT can be transferred more easily and efficiently between persons all over the world. Second one is a blockchain secure NFT ownership. The use of blockchain technology to digitally signify ownership can increase the security of an investor assets ownership. Blockchain technology can also make assets ownership more transparent. And the last one is opportunity in NFT. NFT gives an opportunity to people, especially artists. They enable a new marketplace for artists, allowing them to sell directly to collectors while still receiving royalties on resales. Next. In contrast, many investors have legitimate concerns about investing in tokenized assets. The following are some of the drawbacks of NFT investing. For the first one is NFT are not an asset class. NFT are frequently misunderstood as an asset class rather than a technology method of indicating ownership. The general misunderstanding and enthusiasm around NFT might produce inflated and volatility tokenized asset valuations. And second one is NFT generation is highly energy intensive. Most NFT are now supported by the Ethereum blockchain, which use an energy intensive operational procedure called proof of work to generate them. A single NFT transaction consumes enough energy to power a typical home for nearly a day and a half. And the last one is may need to own Ether because most NFT sales take place on the Ethereum platform. Having the blockchain's native currency Ether is frequently required. Investors who want to acquire NFTs using fiat currency such as the US dollar may have restricted possibility.
Next slide. NFT is seen as a future of investment for many people who certainly think that the value of their investment will possibly increase in the future. And this is one of alternatives to invest their money. However, there are many investors who encountered various scams that hook their funds away. When it comes to the scams of NFT, there are several common scams, which include rug pull, bidding, and pump and dump scams. This is similar to other types of online investment in which scammers do them for the purposes of deceiving investors to share confidential details and invest with them. Next slide. Let me introduce the first scam, a rug pull scam. It's a scam in which promoters of a project publish any related updates that could high up the value of the tokens. After the developers or founders receive the funds from the investor, they will suddenly disappear. Secondly, pump and dump scam. This type of scam is similar to a rug pull scam, in which these scammers post fake news or misinformation about the tokens. As a consequence, many investors were deceived and invested on those tokens. This usually happens when brand new NFT tokens are invented. Next is bidding scam. This is when investors want to resell their purchased NFT to the highest bidder. In the trading process, this bidder will change the currency without informing the investor. For instance, the bidder decides to trade your token at 1,000 baht, and he or she suddenly changes the currency into Zimbabwe dollar. Instead of getting 1,000 baht, you got only 95 baht. This mostly happens when you don't recheck before trading.
So what can be the alternatives or the solution of these disadvantages NFTs provide? Generally, there are no direct alternatives that work similarly to NFT, so we should aim for the solution. Funny enough, when we mention NFT, sometimes profit is not the first thing that comes up, but it is the security that is concerning for the investors. Large amounts of transaction with an abundance of money. One obvious solution is to strengthen the security system, transaction methods, and spotting the scammers. However, we are not really expert in tech stuff. Therefore, we won't be able to go deep in detail on how to exactly strengthen the security. Another solution that I find more promising is to provide education. Many people might know what NFT and cryptocurrencies are, but how many people actually understand the details and how to use it properly? Not including a lot of people who still didn't know about the topic. People should be educated before exploring the NFT world. Although sometimes it is impossible for an investor to protect themselves from a hacker. However, with enough information about the topic, investors can make sure that they won't fall for easy scams such as suspicious links, increase security by using 2FA or two-factor authentication, and store in a cold wallet, which is a lot safer compared to platforms like MetaMask, Binance, and other platforms. Lastly, investors can be cautious and not invest into something volatile or certain projects that are fundamentally suspicious and uncredited. If all of this information gets spread to everyone, the NFT ecosystem would be a lot safer. Lastly, the most important thing is that investors must realize that they should put money that they can afford to lose. NFTs are a new trend that are on the rise. It holds so much potential and has high capabilities to expand furthermore. At the same time, people can lose interest in NFT tomorrow. Therefore, spending what you can afford to lose is essential in this ecosystem. Thank you so much for your attention. These are our reference